Tim, we're behind the scenes on Friday. We started the week pretty weak. We ended the week pretty strong. We had an inefficiency when it came with ISM Manufacturing and Services. What caught your eyes?
Well, clearly the market broke out on Thursday above the top of the trading range that it was in for the entire month of August. On Tuesday, the first day of the week, very few people would have expected that. We started the week sloppy, as you mentioned. But the economic data on Thursday morning was just so stellar and really painted a very different picture than what we'd seen earlier in the week. The ADP report came in with a very strong beat on the jobs number. The ISM non-manufacturing report was 2 full points above consensus, again flying in the face of the weak manufacturing report from earlier in the week, and a lot of chatter from key Fed officials that seem to increase the probability of a 50 basis point rate cut on September 18th.
Tim, tell me, why do they need to cut 50 basis points?
Well, it's a great question, because if you were just to specifically look at the data, it would really lead toward a 25 basis point cut at best. But the Fed funds rate is so out of whack with the remainder of the rest of the yield curve, and it's definitely got the attention of key Fed officials. Neil Kashkari, the president of the Minneapolis Fed, said earlier in the week that is a situation that the Fed needs to address, because on a longer term basis, it's damaging to the economy.
So meaning the Fed's fund rate needs to be below the yield curve right now?
Yes, it should be the lowest rate. It's the overnight rate for money. It should be the lowest rate of all the other rates on the yield curve. We obviously had this issue where the 2-year to 10-year spread was negative for a couple of weeks. That reversed itself on Tuesday and Wednesday, and went positive by a few basis points, but it got out of that negative inversion thing that had set off a couple of big algorithmic sell programs 2 or 3 times in August. The Fed can just very simply say it's important for a healthy economy to bring the Fed funds rate down below the rest of the yield curve, cut 50 basis points, get it out of the way. I really don't think it's going to spook the market that they're panicking, like some people have commented. But I just think it addresses a situation that the Fed would like to not have there. And then it can go on toward all their other measures of inflation. They're still significantly below inflation. A couple of Fed governors mentioned that.
So let me guess.
Et cetera, et cetera.
Let me guess, next week you're going to be watching retail sales.
Well, sure. Retail sales will come out on Friday. It's going to be a little bit of a light week for macro data. Away from that, I think people will still continue to look at headlines and tweets about U.S. trade meetings with China, and also look for more indications, like we got this week, about where the Fed might be going with this interest rate decision on September 18th. And also, I just have to mention that the Brexit situation there's tremendous uncertainty wrapped around it. It's not going to be a high impact market mover day to day, but it's very critical to get resolution of that at some point in time over the next few weeks.